At what point does it make sense financially to set up a syndication or a fund? In other words, how many dollars do you have to raise to break even and make it worthwhile? Well, I'm not sure that's exactly the right question, but let's explain or let's address this here for a couple minutes. First, let's say that you raise $5 million and it costs you 50 grand to set up your deal. That's 1%. That is a very, very low amount to pay to set up your fund and have the administration, the whole front end organized. But let's say you raise something much less than that, and you're in the same ballpark number of dollars. Of course, then now your percentage of capital raising, the cost to raise your capital has increased a lot. Still, even if it's 4, 5, 6%, that's probably still, it's on the higher side of reasonable and realistic, but it's still something to think about. And here's why. When you go through the process of setting up a syndication or a fund, which has a pretty long life, these syndications and funds, a fund can go for 30 years. A syndication is probably going to go for the life of the project, which is probably less than that, or somewhat less, or a lot less. The promoter gets a lot of protection, and the investors get a lot of confidence. In fact, they're probably not even going to put their money into a deal that isn't well organized anyway. So when you start thinking about cutting corners, and maybe something's worth it, maybe it's not worth it, what you really have to think about is whether or not you're even going to be successful if you don't go through this process. I think that it starts to be worthwhile at $400,000, $500,000, $600,000. If you're going to raise $400,000, $500,000, $600,000, this is really an important step. And part of the reason for it is that at some point, when you get to $400,000, $500,000, $600,000, it's going to require more than one person generally to run these deals. You might have 5 people that want to each put in 100. You might have more people than that each want to put in 50. That's a very reasonable and realistic amount of money that many people will put in. Now, you may have one guy who wants to put in the whole 500, but there are some real problems when you have one person put in 500 grand. Number one, they're probably going to want to have a little more control. They're probably going to restrict you from taking certain amounts of fees. They're probably going to restrict your back end. If you turn the deal over real fast, they may well object to the amount of money that you're going to make, and they could tie the whole thing up in some litigation. So there are all kinds of problems that happen when you deal with the people that have a lot more dough, because they have a lot more reason to call an attorney and cause some problems. And the amount that the attorney costs as a percentage of the deal starts going down for them. So just like you're thinking about the percentage of the legal costs on the front end, those legal expenses on the front end protect you from a lot of the problems that you have with somebody who becomes a whale in your deal because you only have one person. It's a lot better from a business perspective to have more people put in less, because no one has any control over you and your business, because you never want to have one person have too much control. That's called concentration, and concentration is always a bad thing. So you have to be very careful about that. So the real issue is, when does it become worthwhile? I think it's worthwhile, at a very small number, because it really, it just really starts to make a lot of sense. It protects you, gives you the kind of freedom that you were looking for in the first place. It costs a little bit more to set up a fund, but a syndication may actually cost more in the long run, because you are probably going to end up doing multiple syndications, and you add those up, and it doesn't take more than 1 or 2, and now you're more than it costs to build a fund. So there's all different ways about thinking about the economics, but the most important thing to think about is your ability to raise the capital. When you don't have a well-organized deal that's been professionally prepared, it's very uncommon to be very successful in raising your capital. I would tell you it's very uncommon. I won't ever say you can't do it. I don't like to say that nothing can ever not be done, but it becomes much more difficult when you don't have a professional package. It certainly limits the quality of the investor that you're going to bring to the table. And if you have a problem later in the future, it's going to be much more difficult for you to defend yourself, because you're not going to have really high quality paperwork to bring to court with you, or wherever you end up having to go. So think about all of the issues, not just the money. I know that everybody's focused on the money, but the truth is that the reason that this business exists is to protect the promoters and to provide a very good framework for the investors. And if you go short on the documentation and the paperwork that puts it all together, then you're just shortchanging yourself, because ultimately the deal pays for the legal expense of the formation and everything else, and provides you with a great amount of insurance protection in the event of problems with your investors in the future. So think carefully about all those things. Don't just think about the money, think about the totality of the arrangement, the relationship, and then think about the fact that it's going to go over many years. And when you spread the costs over many years, especially the fact that the fund or the syndication is going to reimburse you 100% for whatever legal expense, because it's going to absorb those expenses, generally speaking, all the time. And when you think about the totality, I would always err on the side of having more protection instead of less. And that's what makes this a great business, as long as you just go out and stake your claim.